Well, the S&P's flat. It just went positive a second ago. Dow's down 0.5%, and that's because Goldman is weighing very heavily, to a lesser extent J.P. Morgan, on the Dow. Take a look at the sectors. Kind of a, believe it or not, flattish open in terms of sector advances. Consumer staples were up. Healthcare was up. Now it's flat, as you can see. Semiconductors, there's a big story of a global growth on the year. They're a big leadership group. And the banks are weighing on things right now. So just take a look at the banks. Goldman, of course, is 90 points of the Dow. That's a big stock, big price stock, so it's weighing heavily on the Dow. That's probably 90 out of the 160 points. Morgan Stanley is up there. J.P. Morgan's another 20 points or so. So 110 of the 150 points in the downside on the Dow are due to J.P. Morgan and Goldman Sachs. Key is also a little bit on the weak side. Goldman Sachs, my favorite report this morning, an uncharacteristic dud. That's what Evercore ISI said about Goldman Sachs' report this morning. Of course, we talked about the higher expenses, the higher provisions for loan losses there. Just take a look, though. I want to show you some other things. The global economy is starting to look a little bit better, and the players in the global economy have been doing better this year. I noted last week how the strong performances we've seen this year in Caterpillar, in General Electric, in Cummins, Deere, United Rentals. These are big global industrial stocks, all at or near 52-week highs last week. And again, the same situation right now. You see they're outperforming. So we look at January so far and we see this is not a bull market, but it's starting to approach one. Let me just show you why. We're up 4% for the year. Half of the S&P 500 is above its 200-day moving average. That means they're generally in an uptrend. Metals and mining, global signifiers of growth, up 12% year to date. Semiconductors, another global signifier of growth, up 11% this year. The global markets are starting to look a little bit better. How many years have we seen underperformance in emerging markets and Europe? And yet not this year. The Hang Seng is one of the better performers in the year. The Stoxx 600's up 7%. That's the S&P for Europe. Korea's up 6%. Remember, the S&P is up 4%. So we're outperforming. So for once, it looks like some of these fund managers are positioned correctly. We make fun of the Bank of America Global Fund Survey managers. They're usually behind the curve. Actually, this time they were on top of things. This just came out this morning. They're underweight. This is a survey of global fund managers, underweight the United States, and they've been overweight Europe and the emerging markets. Well, heavens, they actually are right this time. That was the correct call on a short-term basis. What's interesting is their theories about how the global economy is looking. The odds of a recession are declining. Now, 68% is awfully high on a historic basis, but it was 77% in the last survey. So the recession odds are declining here. The inflation expectations also appear to be peaking. The expectations for high inflation were greatest in the prior months, and they've been declining in this particular monthly survey. The contrarian trade, of course, is stay long U.S. stocks. So it looks, David, to me, it looks like these global fund managers are starting to embrace the sort of peak inflation story and the soft landing hypothesis that so many other people in the United States are currently embracing. Well, the people who are not right now are the U.S. strategists. Most of them, David, still believe we're going to have negative earnings and a rather weak first half of the year.